A company which is expected to double in the next 3 years, from 2025 to 2028. As you can see, this company, ZETA, from its IPO, the stock price was about $8. It reached $45 per share, and then a decline of over 59%. And this may be an opportunity, as long as this company keeps growing. If you look at the revenue over the last 5 years, you can see an amazing growth rate. Here, 2020, the revenue was about $368 million and a loss of about $53 million. And now the revenue has increased to $1 billion and a loss of $69 million. So this is a high growth company. Moreover, the good side about this business is the market cap is quite small, around $3.3 billion. So when you have a small market cap, the increase in the stock price can be quite huge. From this level, you can easily have a double. And this is not all. If you look at the management presentation here, you can see that their guidance here targeting at least 2.1 billion revenue by 2028, representing at least 20% compound annual growth rate from 2024 to 2028. So if this company reaches 2.1 billion as the management expects, and for the last year they reported 1 billion revenue, this means the business will double. And also the market cap, especially if you have good tailwinds, can more than double. If they maintain their growth rate of about 20% a year in the revenue by 2028, then you can have more than 2x on your investment. The average price from analysts is about $40 per share. So as the stock price is around $14, you can have an easy double in the next 3 years. That means a return more than 15% a year. And that's quite amazing. But again, this can happen only if they can deliver their numbers, what they promised, their guidance, over 2 billion by 2028. And if you look over the last quarter, Q4, you see the revenue has increased by 50%. So an amazing growth rate. And for the next year, 2025, they expect the revenue a growth rate over 20%. Quite amazing. You can also see that the cash flow from operations have increased by 48% to 134 million in 2024. So this company keeps delivering, keeps growing, and this is quite important. Now, if you wonder what they do, they operate a marketing platform which combines all marketing channels into one single platform where their clients can look at their campaigns, look at their customers, the trend, and how to advertise their products and services. Plus, they also have access to an AI assistant. You can see here in this image. By the way, if you want to see the whole video, you can go on their website, ZETA, here, ZETA Investors, and you can look at their video. You better see here what they do. Now, here you can see their past performance for the revenue, as I said, has increased quite a lot for the last 4 years, a compound annual growth rate over 30%, and also their adjusted EBITDA, which is not an important metric, but you can see the trend. As long as this number goes higher, they can become profitable. Here, you can see their customer count expansion, the contracts they have with their customers, with dark blue contracts between $100,000 and $1 million, and bright blue contracts with $1 million in revenue. And as you can see, for the last quarters, from 2022 to 2024, it has increased. This is another important metric. As long as they keep increasing this number, the revenue, you can expect more than double in the stock price. Now let's continue. You can also see their portfolio diversified by different sectors: consumer, retailer, insurance, telecom, financial services, political candidate. Now, as the election has ended, this segment will be reduced, but overall you can see the other industries where they have more customers. Now, here you can see their guidance for the next 3 years from 2025 to 2028, where the revenue is expected to reach more than 2 billion. So that's great. Also for their adjusted EBITDA target to increase. And here the free cash flow is expected to reach 340 million by 2028. Margins, free cash flow margins to be around 16%. Now, if you apply a multiple, let's say 20, if they maintain their high growth over 20%, it might be even higher than that, then the market cap can easily double from 3 billion to 6 billion quite easily. And as I said, it all depends on their growth rate. If that growth rate is maintained by 2028 around 20% or over 10%, high double digits, then for sure the market cap will more than double. Now, here, this is a statement, a strong statement. ZETA 2028 calls for 4 more years of 20% growth and free cash flow margins expansion, which puts them in the top 8 of public companies that can reach an annual growth rate of about 20% for the next 3 years and expand their free cash flow. Now, this is a strong statement because I am sure that there are more companies in the US that grow by 20% a year in their revenue and have free cash flow, high margins for the free cash flow. Now, maybe there are no more, but I'm sure that you also found some companies that can grow by 20% in the next 3 years, a year. This is a strong statement. I'm not sure if their analysis is right, but this is their statement from their presentation, investor presentations. And then here, under you can see how they're expected to reach 2.1 billion in revenue by 2028. Monetize their Gen AI capabilities, leverage their publisher cloud platform, introduce new channels, extend vertical expertise, new customers, new services, and expand their partnership ecosystem. And they expect this target of about 2.1 billion by 2028. Then here you can see their guidance for the next year, this year, 2025, where the revenue is expected to be around 1.2 billion. Growth rate over 23%. This is good. As long as they maintain this growth rate high, around 20%, you can expect a double from this company. And also the free cash flow to reach $129 million. So those are strong numbers, especially this statement. Only 8 companies, US publicly listed. Strong statements. Then you can see the total addressable market, 19 billion and 64 billion intelligence powered media, which is expected to grow more in the future. And as they have only 1 billion in revenue, they have room to grow. And this is the upside for ZETA company, this business, ZETA Global Holdings, with a market cap of only 3.3 billion. As you see this massive decline of close to 60%, this may be a good opportunity, but only if, be aware, because there is also risk. This can be an opportunity only if, they maintain the growth rate around 20% or at least 15 to 20%, and they don't continue to issue more shares in the futures. Because if you look at the number of shares here, you can see that it has increased in the last 3 years from 148 million to 185 million. It's not that much, but you have to be aware of this dilution, because if they continue to issue more shares in the future, this may be a problem for you. So this is another thing that has to happen. Not that much dilution. Growth rate in the revenue, lower their dilution, their shares outstanding, not issuing more shares. And of course, another thing I want to show you, about their free cash flow is this. You see their cash from operations for the last 3 years, 143 million, 90 million, 78 million. But be aware that the real free cash flow, if you know some accounting rules, is without stock-based compensation. And if you look at stock-based compensation, you see over 194 million, 200, 298 million. So higher than their cash flow from operations. So the real free cash flow is with minus for the last 3 years. Just be aware of this. Now, if they can increase their free cash flow to the real free cash flow to reach 300 million as they expect by 2028 without too much stock-based compensation, then that will be great, and the stock price, the market cap, will really double from this level. And the management, as you can see, all directors own 14% of this company. Again, if you've seen my previous video about another company, which I had a real problem with that company because it's not fair for investors, you see here two classes of shares, A and B. A is for normal investors like us, retail investors, and B for management, only for management. So the management controls the company. They decide how many shares to issue in the future. They decide everything. So you have to be aware of the risk and the reward. This company can double only if they can keep growing by 20% a year by 2028. So that's it for this video. And if you have other questions, please let me know in the comments.